We have this important guest I was speaking to you about, the head of SAIL, Soma Mondal, the Chairman and Managing Director at Steel Authority of India, or SAIL as we know it, joining us. Ms. Mondal, thank you very much indeed for sparing time for us at a time when steel is the most interesting, more interesting than gold actually. Well, my first question to you is that JSW Steel announced a 6.5% increase in prices on April 1st. Is SAIL going to respond? What is the total price increase you've already taken in April?
We, as a company, we go as per market price. We follow the market, or we go as per, I would say, we decide our prices based on market, in line with market. So we would do whatever the market requires.
Well, so how should I understand this? Should I assume you have raised prices?
Again, my answer would be the same. Our prices are in line with the market.
Okay, I'll leave it at that. Let me get to the more interesting question. What are the global demand trends and what are the raw material prices, iron ore prices telling you? Do you expect global steel prices to rise even more from their already stratospheric levels?
I agree that the prices are the highest in the decade. And basically, there are three reasons for it. One is there has been a supply side constraint where post-COVID and even the second and the third phase of COVID, the ramping up of production in many parts of the world has not happened to the degree it should be. Secondly, China also has some policy of reducing inefficient production capacities. The second point here is the demand pickup. It started with the demand pickup of globally, the auto sector demand picked up. Then the thrust of the government, the Indian government, China, even the US on the infrastructure push, which is there. That also has helped in increasing demand. And thirdly, the raw material, the iron ore supply constraints. So this is there, and I would believe it would remain for some time in the near future. So I would expect the prices would remain strong in the next quarter or two.
Okay, since you mentioned that demand has picked up, especially in the auto sector, what is the sales volume target in FY22? What kind of growth can we expect?
The demand growth would be there. In SAIL, our sales would be, I think, more governed by what we produce. I wouldn't see demand as a constraint there. We would be in a position to sell whatever we produce. So it would be a production, our emphasis on increasing our production to maximizing that level.
Oh, that's a great answer. I mean, demand is no constraint. Everything will depend on how much you can produce. In that case, what is your capacity utilization as of now? And how much can your output increase in FY22?
FY21, there was a degrowth. And that is mainly because of the first quarter where we had reduced production. If you analyze the production of crude steel, which we had in the month of March, we are more or less near the capacity, which our capacity of crude steel as a company. So I would expect that production levels we would try to maintain, maximize our production from the various capacities. Our thrust this year would also be in increasing the basket of finished steel, reduction of the semis in the basket. So more of consolidation this year. We have reached a crude steel production level in the month of March, which is quite significant. And our thrust would be to consolidate that and also increase the finished steel basket
in that case, can you give us targets for what will be the increase in FY22 for crude steel and what will be the target for finished steel?
Finished steel, I would not comment now. Crude steel would be at least more than around 10% increase in production. At least I would aim at.
Can you tell us a little bit about the capacity expansion plans for FY22, given that demand is rising? What can we expect?
This year, the capex plans would be around 8,000. We are planning to reach around 8,000 crores. We are working towards it. And they are mainly towards meeting the gaps which we have in the last phase of expansion, which we did, bring out some technological improvements. And also some environmental related investments also. So right as of now, they are mainly into meeting the gaps which have been left in the last expansion. And so far as when you're talking about main expansion plans, we would be working out now on that.
You have managed to reduce your debt as well quite a bit. Can you give us a game plan on how much the debt would be about 12 to 18 months from now?
It does not include the lease liabilities, but the 35,000 crores, out of which nearly more than 9,000 crores or 10,000 crores was in the last quarter. It was there. We will continue to emphasize on reduction in our debt, and that would be by way of continuing our thrust on reducing our inventory, increasing our production, value addition. That we would continue to do that. But how much we would reduce our debt in the next quarter would depend on both our internal actions which we take and also on the external, the market. So to give a figure at what our debt would be in the next financial year would be difficult to say right now.
All right, got that. Ms. Mondal, let me come to the receivables picture now. Dues from railways was approximately 6,900 crore when we heard you in the last con call. Now, have those receivables come down?
The receivables we have reduced by around 25%. So, and as these receivables are the majority of which is from the government or the PSUs, and so we are quite confident we would be getting it in the near future. Not a cause of worry. Much of it is secured also by way of BG or LC.
Of course, yes. And of course, the government has been clearing bills of PSUs as well. So 25% reduction in receivables. Now let's talk about wage revision. Has the company undertaken the pending wage revisions in the quarter that just ended? Will you do it in this quarter? What's expected in this year?
There would be certain amount of cash flow because of wage revision. And we expect it to happen shortly.
So can you give us an estimate on how much employee costs can go up on an absolute basis in FY22, and what kind of EBITDA margins would you be targeting?
EBITDA margin would depend on the prices which we get. So as of now, it would be difficult to give a figure to it. But from our side, we would try our best to reduce cost, which would help in increasing our EBITDA margins. But to give a figure again, I say it's difficult because you know how volatile the steel market is.
Is it true that the employee cost jumped to about 12%? That's what one report had indicated.
I would say that we would, if you say 10% increase in production, okay, at the same time, we do have some amount of superannuation also. So I would not say 10% increase in cost. The cost per employee may go up to a certain extent, but the overall cost would not increase by 10%.
Okay.
Because of other factors.
All right. Okay. Ms. Mondal, what's the quantum of iron ore sales you did in the fourth quarter, and what are you estimating in FY22?
Last year, we actually sold a little more than 3 million ton. Actual dispatch quantity, no auction quantity was a little more than that. And this financial year, we have a high target of nearly, say, 20 million ton. We have a target, but it depends on many factors. So I would not be able to say exactly where we would reach, but our thrust would continue to sell as much as possible. I don't know, because it is a clear cash flow for us.
What will be your dividend policy in FY22? Has your shareholder given you any directions?
We do not have a policy as such, but we would try to meet with the stakeholders' expectations. Government does have a policy for the CPSEs, which is a part of a percentage of the net worth or the profit which they have made. But we would work based on our profits. We would continue to make our stakeholders happy.
This is a question that's come actually from viewers. Since things are looking good, will the government of India ever sell Steel Authority, sell SAIL, find a strategic investor, or, of course, do an OFS?
See, we have already had an OFS recently, just way back in January itself, which we received a very good response. I am not aware of any such thought process of government.
Okay. All right, ma'am, we'll leave it at that. Thank you very much indeed for joining us and patiently answering a bunch of questions. We are heading into market opening and we'll reserve our other questions for later. Thank you so much for joining us. Okay, we'll just run you through the past financials of SAIL. You will get the revenue picture first, followed by the EBITDA trend, and finally the profit after tax. This is the past 5 years, but actually FY21 is going to be good for them, despite losing the 2 months, as you saw in the case of Tata Steel and JSW Steel. That's SAIL's EBITDA. It's been improving, even in FY20. And finally, you'll get the net profit as well. Okay.
Hello and welcome to ET Interview. The steel sector literally has been on a tear. Steel prices are at a record high and steel companies are indicating very proudly that it's never been so good for them. So how should one read into the current demand and price surge in the steel sector? Is this just a demand supply mismatch which had got created post the lockdown and which will get normalized, or the strength and the demand is here to stay? Now, just to remind our viewers, steel is a global commodity. So whatever we discuss today has to be looked in context of what is happening in global markets. So to discuss all that and much more, where steel prices are headed, where SAIL is headed, and what we should expect now from the PSU sector, given that the entire Indian PSU sector is going through a massive reboot. It gives me great pleasure to bring on board the chairman of SAIL, Ms. Soma Mondal, to talk about her thoughts on the steel sector and on the company. Ms. Mondal, good morning. This is Nikunj Dalmia from ET Now. It's your first time we're interacting with you on ET Now. So very warm welcome to you and really appreciate. My introduction, I guess, was the first question, which is that it's never been so good for steel companies. Are you personally surprised with the underlying demand and the pricing trend currently which steel companies are reporting?
If you say whether I'm surprised, not exactly surprised, but happy that the situation is like this. You see, we would expect the demand to continue for some time. There are some reasons why the prices are among the highest in the decade. One is there has been a supply side constraint post-COVID, where I'm even in the second and third phase of COVID wave, which has impacted the ramping up of capacities in certain parts of the world. Secondly, China is expected to close down some inefficient units because they have a target of reducing the carbon footprint. Secondly, the demand pickup in auto sector, construction sector, even the white goods sector, and the government policies in various in India, China, and even in the US has put a thrust in the demand also. And thirdly, and most important, is the raw material supply constraints, the prices of iron ore. All these 3 points are majorly driving the steel prices and the demand also.
Do you see enough and more visibility for next 1 or 2 quarters?
The next 1 or 2 quarters appear to remain the same. If you see at higher prices, many viable and closed capacities may open up, thus increasing supplies. Once this happens, the supply constraint would see a little of ease and put some downward pressure on prices. As globally we are more in control with COVID and the vaccination drive is on, we would see some pickup in the productions also, which have been right now hampered by the COVID situation all around the world.
Now, last couple of years have been tough for SAIL. You've done a massive restructuring and a big reboot on the employee cost front. Given that currently steel prices are at a record high, realizations are at a record high, I would assume that cash flows would increase immensely. How are you looking at capitalizing the strong steel environment and steel prices to improve sales balance sheet?
See, our focus right now has been on reducing our leverage position. We were highly leveraged in the month of April. We had reached around, borrowings had reached around 52,000 crores. By December, we had been able to reduce that to 45,000 crores. And as of 31st March this year, we are a little over 35,000 crores. So balance sheets, total focus on balance sheet, and coupled with our increased volume, thrust on increasing our efficiencies, reducing cost, techno-economics improvement, we would expect a lot of improvement in our balance sheet and our borrowings, also improvement in our leverage position.
So the current level of about 35,000 crore of debt, is that a comfortable position for SAIL, or the aim is to bring it below 30,000?
Because we want to start our next phase of expansion also. We have a desktop study done. We have the land bank with us. So the moment we are able to reduce it by a few more thousand crores, we are planning our next phase of expansion.
Mr. Mondal, why is the conversion cost for SAIL or Steel Authority so high? And I'm using the conversion cost which your peers currently have. And how are you planning to address it?
One of the main reason for higher cost is the wages and salary. And at higher volumes, this would naturally go down. Our techno-economics with the new facilities which have come in are improving every year. So I would expect, we cannot do too much on reducing our wages and the salary bill. But yes, we could reduce our manpower. We are not the amount of superannuation which is happening. We are not recruiting as much. So with a more balanced approach of recruitment and also increasing our volumes, we would reduce our cost of production, our conversion cost.
Where do you see employee cost as total percentage of your cost settling? I mean, in the medium term and in the long term?
It would be difficult to say. We would not be able to reduce too much. Reason is we have our new salary wage negotiations going on. So the amount which we would increase in the wages would have an upward impact. At the same time, since the cost of production, the number of manpower would reduce and the volumes would increase, it would act both ways. It would more or less neutralize.
Okay, so I don't want to get this one wrong. What you're confirming to us is that if steel prices go up by 1,000 rupees per ton, it has potential to move your EBITDA by about 10%.
See, I have not done the calculation, so I would not be able to say right now. But movement of prices by 1,000 would surely impact it's a big impact on our EBITDA. Because it would entirely add to EBITDA.
Okay. Now, Ms. Mondal, it has taken slightly longer than expected, but the expansion plan to take steel capacity from 13 million ton to 21 million ton is done. What is the plan to ramp up the utilization?
See, if you see the annualized crude steel production of the month of March, we have more or less reached our crude steel capacity nearly, not in. So I would say our crude steel capacity we are capable of producing right now. Our planned capacity expansion, whatever we had so far as crude steel goes, we still have to ramp up our mills so that our basket of semis reduces.
If one looks at the realization, Ms. Mondal, realizations for domestic market and realization for the export market, the export realizations currently are very strong and they're better than domestic realization. Would SAIL be thinking on, or would Steel Authority be thinking on lines of exports more?
Our first aim is to meet the demand of the domestic market and also have a strategic presence in the export market. So we would continue to do the same.
How exactly do you think next 3 years for Steel Authority would be different from the last 3 years? Last 3 years was about a commodity cycle which was against you, and it was also about restructuring and putting new processes into play. Next 3 years, how do you see things optically and dramatically changing?
See, in the past, the cycles have been very small. If you see, 18-19 was a good year, 19-20 was not. And then 2021, first 6 months was 3 months or 6 months, wasn't great, but then it just picked up post-COVID. So next 3 years, I would expect that the demand would continue, at least for next 2 years or so, the demand would continue in the same way. Production, the major capacities also, if you really see, is not coming up around the world other than in India. So I would expect that the demand and prices would remain strong. And so far as sale is concerned, what we need to do is plan out our next phase with our lower leverage position, more comfortable in our borrowings. We would plan out our next phase of expansion.